is Mary Margaret, and I'm here to answer some more of your frequently asked questions. So today I'm going to be talking about tax credits versus tax deductions. Which is better, a tax credit or a tax deduction? Well, for starters, that's like asking what's better, pizza or wings. They're both great, right? They're just different, and here's how. A tax credit is a dollar-for-dollar reduction of your tax liability. Some tax credits even have the ability to take your tax liability past $0 and generate a refund. These are known as refundable credits. Now, tax deductions reduce your taxable income amount before your tax liability is calculated. If you itemize your deductions, you might be able to deduct state and local taxes, certain mortgage interest, and charitable contributions, just to name a few. It's also important to know that certain credits and deductions have limitations and could potentially be limited or carried over to future years. And we certainly don't want you to leave your hard-earned money on the table. Schedule a meeting with one of our tax managers to review your unique situation so that you can utilize deductions and credits efficiently. What are considered advertising expenses? This is one of CPA's most common answers to questions they're asked. It really depends. The IRS requires that business expenses be ordinary and necessary to be deductible. Now, you're going to hear that language a lot as we talk about expenses, so bear with me. For example, a real estate agent could make a strong case for deducting vinyl wrapping their car to advertise their services. However, it would be much harder to make the same argument for a self-employment software engineer that works out of their home. In addition, if you're considering having non-traditional advertisement expenses, such as TV, radio, billboard, etc., please schedule a consultation with one of our tax managers to discuss your unique situation. What meal expenses are deductible? In normal years, most ordinary and necessary business meal expenses are limited to 50%. There has been a temporary increase to allow 100% deduction for business meal expenses if they were paid for or incurred after December 31st, 2020 and before January 1st, 2023. So we've still got about a year. Also, the IRS's requirement for employees to provide substantiation for the expenses has been lifted for expenses under a certain per diem rate. However, that does not mean your employer does not still require you to provide substantiation for your expenses, so make sure to save those receipts. The per diem rate threshold can also vary by city and state, and what is considered an ordinary and necessary expense can vary from taxpayer to taxpayer. So reach out to one of our tax managers today to discuss your situation more specifically. What travel expenses are deductible? This answer does not include meals. That was covered in meal expenses like we just talked about. Travel expenses that are deductible include any ordinary and necessary expenses incurred while traveling for business. The key words here, again, are ordinary and necessary. If you are flying first class and staying in 5-star hotels for every business trip, the IRS might not consider 100% of your travel expenses to be ordinary and necessary. The same goes for a week-long trip to Hawaii where you only had one business lunch. The IRS does in fact require the employee to provide substantiation for expenses over a certain per diem rate. And the same goes for travel expenses as meal expenses. The per diem rate threshold can vary by city and state, and what is considered an ordinary and necessary expense can vary from taxpayer to taxpayer. So reach out to one of our tax managers today to discuss your situation more specifically. What office items are tax deductible? Any ordinary and necessary expenses incurred while conducting your business can be deducted. Notice, ordinary and necessary again. A $5,000 top-of-the-line gaming computer could be considered ordinary and necessary for a video game designer, but maybe not a person who owns a landscaping company. Is health insurance a tax write-off for small businesses? Yes. Health insurance can be deducted for the self-employed and their employees. However, the portion related to the owner's health insurance has different tax reporting requirements than the employee's health insurance. The tax reporting requirements vary depending on if the business is taxed as a sole proprietor, a partnership, or an S corporation. Reach out today to schedule a consultation with one of our tax managers to discuss the correct way to report your health insurance expenses. Thanks for watching. We hope we answered your questions. If you have any more questions, drop a comment below or reach out to our team directly at acuity.co. And if this video was helpful for you, follow us on social media and hit subscribe on our YouTube channel. More FAQ style videos to come this year.